Markets are trading very close to the highs of the session on this first day of the quarter and the month. Clearly, you people with money like the March jobs report, at least what it may do for the Fed. Time to take a look at what it means for stocks, the Fed, interest rates, and more. Let's bring in Joe Heider. He's Cirrus Wealth Management president, along with Moodys chief economist John Lonski. Gentlemen, I'll start with you, John. Does this report that we got push the Fed closer to a rate hike sooner or much later?
I think it pushes a rate hike out further at some point into the future, though today, in response to this report, the possibility of a September rate hike came back into view. Chances are that if there's a rate hike in 2016, it may not be until the December meeting.
Okay, December, where we, I believe, have a 64% chance, or like a possibility that we would see that rate hike. It's only 30%
That's correct.
June.
You know, there was something else that happened today that's very important.
Yeah.
Auto sales came in under expectations, under expectations. That tells me consumer spending may be peaking. With the world economy so dependent on the U.S. consumer, the last thing in the world we need is a rate hike that might discourage consumer spending.
Yeah, but auto sales were still at near 10-year highs. So, Joe, you're the money guy in all of this. Where do you invest around what you believe the Fed might do, or is that a fool's game?
I think it's very tough to predict when the Fed's going to raise interest rates, but I do believe we think that the banking sector has gotten beat up, and there's good opportunities there. As interest rates rise, whether that's September, December, it's a longer-term view, but we think there's real opportunity there. J.P. Morgan, for example, has a very good dividend yield, and while you're waiting for the stock price to improve, we think it's an opportunity there. We also think housing is strong. You see the consumer confidence numbers are strong. Manufacturing is improving. Our opinion is that the consumer is going to be here for a lot longer yet.
Okay, well, Joe just outlined some positives, but John, you're saying that we don't want to raise rates into what appears to be a very tentative economy. Do you see it that way? I just want to make sure I'm understanding exactly how you're categorizing this.
That's exactly how I see it. You know, I think real GDP growth this year comes in at about 2%. That's down from 2.4% 2015. We have early estimates of first quarter real GDP growth less than 1%, down from 1.4% the final quarter of last year. The upside for this economy is quite limited. You got a nice report on employment, but a lot of those jobs are coming from lower paying categories. Despite a 5% unemployment rate, the average wage is rising no faster than 2.25%, 2.3%. In the past, 5% unemployment would be joined by wage growth well in excess of 3%.
And yet we have 195,000 people plunking down $1,000 apiece to reserve a Tesla Model 3, Joe. So I look at that and I say, wow, that is certainly fascinating. I mean, you look at that consumer, what do you see?
And what happened to the stock prices of GM and Ford today?
Well, we can
down sharply.
Yeah, they were down sharply, but Tesla's higher. So, Joe, your last thought on putting money in stocks versus hiding them in treasuries?
Well, I think the stock market has a way to go. This recovery has lasted a long time, but it just continues to plod forward in the right direction. So we think there is real opportunity here for the economy to continue moving forward, and therefore stocks are a good bet.
Okay, Joe Heider, John Lonski, great to see you. And we close out the first trading day of the month in April with no April Fools, a gain of 112 for the Dow after enduring a swing of more than 200 points.